So ladies and gentlemen, thank you very much. I welcome you to the second session of the summit, which is the African Continental Free Trade Agreement post-COVID-19. We've just had an exciting morning session with His Excellency Wamkele Mene, the AfCFTA Secretary General, Her Excellency Dr. Amani Abu Zaid, and the CEO of Zenith Bank, Ebenezer Onyegu, Zenith Bank PLC. It's been a really exciting, interesting session. So this is really a follow-up from that discussion around the African Continental Free Trade Agreement post-COVID-19. So the purpose of this whole summit, this annual EBII summit, is focusing on helping African businesses and governments improve their due diligence in order to attract the right investment from within the African continent and outside the African continent. So I'm Adjoa, Adjei-Twum, the founder and CEO of EBII Group, who's the host of this summit in association with Zenith Bank Ghana Limited. So on the 17th of August, 2020 in Accra, which is this Monday that just went past, the President of the Republic of Ghana, Nana Addo Dankwa Akufo-Addo, handed over the AfCFTA Secretariat building to the African Union. To some, this is a symbolic and shows that despite the challenges of the COVID-19 pandemic, the African continent is battling hard to boost intra-Africa trade and economic development through the African Continental Free Trade Area. The AfCFTA was supposed to have started in July 2020, but has been postponed to January 2021, according to His Excellency Wamkele this morning, which he touched on as well. So it's been postponed to January 2021 to adequately prepare for operationalization. So the AfCFTA framework covered two phases, phase one being trade in goods and trade in services. And most of the protocols of this phase have been completed, though a number of issues are still ongoing. In phase two, negotiations cover investment, property rights, and competition policy, expected to be finalized by January 2021. Given the current travel restrictions, negotiations on key issues such as rules of origin for goods and schedules of specific commitment for the services have been postponed by many to take place online. The burning question at the moment is, what will be the direction of the AfCFTA in the post-COVID-19 era? His Excellency Wamkele Mene has touched on a lot of these earlier on. But this morning, I have here with me two amazing panelists. I've got Ebenezer Essoka, who's a former Vice Chairman of Africa, CEO South Africa and Southern Africa, CEO Central and West Africa Standard Chartered Bank. Ebenezer is an executive chairman currently at EBII, an advisory firm focused on economic development across sub-Saharan Africa. I've also got here with me in this discussion, Dr. Hippolyte Fofack. He's a chief economist and director of research and international cooperation department at the African Export-Import Bank. Dr. Fofack holds an advanced degree in international economics and finance from the University of Bordeaux, France, and PhD in mathematical statistics from American University in Washington, DC, USA. Thank you. I welcome both of you, my honorable guests, joining me this morning for this wonderful conversation. So thank you very much. You are both welcome. Thank you. So for this panel, we're going to be looking at the opportunities for the public sector, the private sector, the local and foreign investors. And I'm going to start with my first question, but actually before I do that, I'll get Dr. Fofack and Mr. Ebenezer Essoka to give a short introduction of themselves aside what I've already said. Anything else that you would like the audience to know before we dive into the questions? So I'm going to start with you, Mr. Ebenezer Essoka. Thank you so much.
Well, you know, I tend to give space for the younger talent. So Dr. Fofack, please.
Thank you very much, Chairman, for giving us the room to really introduce these sessions. And thanks for EBII for really associating the African Export-Import Bank and creating the platform for us to reflect on a timely topic, really on the eve of commercial trading on the AfCFTA. And I have to say that promoting integrations and more generally, regional integrations for political, economic, and developmental reasons, has been on the African development agenda since the early days of independence. It's a long story. And back in the 60s, a number of leaders, founding fathers of the continent, actually saw integrations, regional integrations, as survival for the African continent. And that was necessary given the world they were actually entering into. In one of the most passionate speech delivered by President Kwame Nkrumah at the time of the opening of the OAU in 1963, he emphatically said, "We must unite now or perish." We must unite now or perish. And the now is very important in that statement. In fact, what was the alternative for the African continent? How were nations, or should I say, newly released colonies, expected to effectively compete against their former colonial power? It was as if we're asking a baby who can barely walk to run a marathon against his own father. And yet, that is precisely the race African countries have been running over the last 60 years, predictably without success. The economic and technological gap between Africa and the rest of the world have actually widened significantly, undermining the process of economic development and transformations in a world where technology has become the major drivers of growth and development. We've all heard about the US-China trade war. That's the way it started. But it has morphed quickly into a tech war, the Huawei, the TikTok, in part because technology is actually what drives growth, development, and competitiveness in the new economy. And of course, with the fragmented continent that we inherited, and in the absence of a continentally integrated framework that will allow them to optimally allocate the resources to build the transnational infrastructure, digital, physical, to really facilitate the process of integration and economic transformations, Africa integration into the global economy has remained very marginal. Even though the region is 17% of the world populations, its share of global trade is less than 3%. Africa weighs less than Holland in the global trade scheme. And another dimension of that fragmentation is actually the structure of African trade. It remained heavily tilted toward primary commodities and natural resources. And for instance, if you take Nigeria, one of the largest economy on the continent, oil production accounts for 90% of Nigeria's foreign exchange earning or exports, and 65% of fiscal revenue. In other words, the dynamic of growing Nigeria very much hinges on what happened in the oil market. It took 60 years for African leaders, as the chairperson said, to establish the AfCFTA, to realize that, in fact, what was discussed 60 years ago was actually fundamental in transitioning toward a more competitive world. And so the AfCFTA was born, and essentially erasing the artificial barrier inherited from the Berlin Conference. And that signature had significant implications in the sense that it's about history, erasing that history. It has implication on the present, one signature extending, covering the entire continent, and it has implication for the future. Where is Africa going in terms of its integration into the global economy? In a sense, the timeliness of this year event organized by EBII cannot be overemphasized. It's a timely event to really explore what should be done to make sure that this framework, which is full of so many potential, the AfCFTA, actually delivers. And there are a number of challenges along the way, and we do hope that the session will provide opportunity to reflect on the potential, but also challenge that should be overcome to ensure a successful implementation of this tremendous agreement. Thank you.
Thank you very much, Dr. Fofack. That's a very powerful introduction there. Thank you so much for that. I'm going to go straight to Mr. Ebenezer Essoka to say one or two words before we go into the questions. Over to you, Mr. Ebenezer. Thank you so much.
Well, thank you very much, Adjoa. And I think what we did earlier in giving the opportunity to younger talent just develops inspiration and creates inspiration. I had a different set of comments prepared to be made here, but based on what he said, I'm just inspired to say the following. He talked of a foundation that had been put in place for us to be able to have this conversation today. 60 years, different generation of leaders have made their contributions. I'm proud to say we're here today because many of us on this call, those of us involved in this conversation directly, and those listening to this conversation have equally contributed to the creation of a solid foundation for the creation of the Africa Continental Free Trade area. Now, many of you, like myself, have lived in various African countries, particularly lived in about 21 African countries, and contributed, like each and every one of us, to the implementation of a development of strategies for enabling economic environments. And this is clearly reflected in the annual surveys of ease of doing business. Many of us, Dr. Adjoa and yourself, have made contributions and have actually managed and advised successful domestic and international corporations that are today in the continent of Africa, generating returns of equities, ROEs, north of 20%. And I think in the spirit of talking about contributions people have made, I would personally say I have directly and indirectly contributed to developing solid professionals across the continent. I can really count on about 630 professionals have contributed and who are today making a difference across the continent. You know, so what do we have here as a continent ready to implement the free trade area? It is a continent with geographies well positioned to host investors. It is a continent with a productive and progressive private sector, generating wealth and improving the welfare of individuals. It is a continent with talent pools that are ready to take on the challenge to implement the imperatives of this initiative. The entrepreneurial zeal of an average African I've seen across the continent is very much alive. And that is what I think we have here. That it was validates the conversation I think Dr. had earlier about a foundation and the laying down of that foundation. You know, Adjoa, I'm absolutely excited to be on the EBII platform. And I thank you for initiating this conversation, which I am absolutely certain will contribute to us effectively being able to bridge the solidarity deficit that currently exists in our continent with regards to trade and investments. Thank you.
Thank you so much, Mr. Ebenezer Essoka, for that wonderful intro there. Thank you so much for also being on the panel today. I'm very excited to have both of you, yourself and Dr. Fofack, with us today. We're going to go straight into the questions. And my first question is going to go to Dr. Fofack. And my question is, what is the expected utility of the AfCFTA going to be? That a lot of our viewers today are from Europe, from the US, and we have quite a good number also from the West Africa. So over to you. Thank you so much.
No, thank you very much, Adjoa. I think, as we said earlier, and as said this morning, and the AfCFTA, it's really a continental framework to reintroduce Africa to the world with tremendous potential in terms of economic transformations. In fact, it's the largest trading area in the world, but membership with more than 1.2 billion consumers, and a combined GDP of $2.5 trillion. And not just such a market of that size comes with tremendous economies of scale, and that could actually stoke significant gains in terms of productivity, in terms of competitiveness, and while at the same time strengthen the bargaining power of Africa in international trade negotiations. And in essence, if you look at the potential benefits of this framework, both for Africa and globally, and there are significance. Let's start with Africa. If you take Africa, for instance, it's definitely much difficult for one African country, let's say Cape Verde, to enter into trade negotiation with the EU or the US at WTO stance, especially even more difficult now as we move away from the global framework toward bilateral agreements. And in essence, by having Africa speaking one voice, the AfCFTA overnight will strengthen the bargaining powers of African countries in international trade negotiations, and that will be significant in terms of boosting their share of global trade, which, as I said earlier, has remained very marginal, 2.8% of world trade. Another important aspect, which still apply to Africa, is in the area of really welfare gains. And if the agreement works as planned, we could see rising per capita income, real wages, both for skilled and unskilled workers, maybe even more so for unskilled, which will set the continent on a path of more inclusive growth model, which will actually lift all the different strata of the populations. Now, globally, I think I mentioned the fact that in terms of productivity gains, in terms of competitiveness and return on investment, as mentioned earlier, are going to be significant on a rising trend, which will be very good for foreign direct investment, for investors interested in the continent. This is something very important. And we've seen already interest as a result of that agreement. I can mention the fact that Volkswagen has actually built a plan to manufacture a car in a tiny country called Rwanda. They're not doing that for the Rwandese market. Too small, it used to be too small. It has not changed. What has changed is that from Rwanda as a rear base, you could actually export those cars to Tanzania, to Kenya, much larger market, without incurring the liability costs in terms of taxes and tariff and so forth. So the FDI is very important, and we'll see a change in the composition of FDI away from commodity and natural resources toward labor-intensive manufacturing. We also see another benefit, which is essentially the development of regional value chains to drive industrializations and in the process further enhance Africa integration into the global economy. Mind you, one of the key reasons why Africa's share global trade has been so minimal, 3%, is in part because global trade is overwhelmingly dominated by manufactured goods. So by building these regional value chains, we will actually facilitate the transition toward a more competitive economy and enhance integration to global economy. Another important benefit that I should mention, it's in the area of intra-African trade. And as you all know, Africa's share of intra-African trade, 15%, has remained very low compared to Europe, 70%, or Asia, 57%. And we see boosting that intra-African trade, which is set to double within the next decade of implementation of the AfCFTA, as a significant gain in the sense that it's tend to significantly reduce the exposure of the region to global volatility. And the last point I would like to mention, which is very close to your heart, Mr. Adjoa, it's the potential benefit in terms of macroeconomic management and risk perceptions. And one reason why the risk perceptions of Africa has been very high relate to that recurrence of volatility in growth, which is linked to the commodities price cycle. As we move toward a more diversified economies, you essentially reduce that risk perceptions, the risk premium, and therefore attract even more investor while increasing the return on investment, because the cost of fund will have been lower significantly as a result of that globalizations of risk perceptions, which up till now has been very heavily skewed when it comes to Africa. Let me stop here for now.
Well, thank you very much for that. That's very well answered. So thank you. I would take questions a little bit later from the audience. I'm going to go straight to Ebenezer Essoka with the next question. And my question for you, Mr. Ebenezer, is what are the processes and politics of the African Continental Free Trade Agreement? We've got a lot of investors, foreign investors, who are interested in exploring the opportunities, especially what His Excellency Wamkele have highlighted this morning, and also what Dr. Fofack have highlighted. What are the politics around some of these opportunities? Thank you.
Thank you very much, Adjoa. And Dr. O'Reilly, thank you for the comments you made earlier. Well, let me start by saying signing of the agreement, ratifications, and the ability to be here 3 years later and have a secretariat set up represents diplomatic and political success that must really be recognized. Now, is this game over? No. I just believe it's game on. You know, critical parts of the agreement are yet to be concluded. We all know from experience that trade transactions and negotiations are never easy to conclude. And generally, it's an ongoing process. It is never done and closed. You continue working on it. So the outstandings in this case, going straight to the subject matter and answer your question, and you actually touched on this earlier, are on the negotiating protocols on the key areas of trade in goods in phase 1 and trade in services. You know, on the agenda of goods, I think the most important variable here is the concessions around the rules of origin. You know, finalizing rules of origin will make a big difference for tariff offers. And I think member states, you know, and I've talked to many, are also yet to finalize the list of tariff concessions of 90%. That's something else that is outstanding. You know, the more difficult one, in my opinion, based on my experiences, is trade in services. This is a bit more tricky. And as you all know, and as a banker for many years, I've always questioned why financial services were never considered as tradable. Because I believe I've always traded in financial services. It's only of recent that they have been recognized and included within the scope of trade policy making. So the work in this space is still new, challenging. It will be to many of us in the African space. And there are 5 key priority service sectors that have been defined by the Africa Continental Free Trade Area: financial services, communications, transport, tourism, and business services. And when we talk about business services, they cover a whole area of activities from medical, accounting, architectural, engineering, etc. Now, those of us in banking, and I heard the Group CEO of Zenith discourse in the opening session, know what it means to deal with regulations in the banking industry. The challenge then would be to revisit an outstanding conversations around sorting out the regulatory issues. I think is at the center of it all in this area, particularly in the banking sector. Trade in commerce with the regional economic, the existing regional economic community regulations, would be extremely important to be harmonized. I think we have a great example here. If we look at the Francophone Africa markets, both UMOA, the economic zone of West Africa, and CEMAC, the economic zone of Central Africa, where in banking, you already have, or in business in general, you have the OHADA law. The harmonization in that space has facilitated the regulation of banking activities and trade in other services. So those are examples I think that need to be followed, but this is a major outstanding. So for phase one, we have outstanding protocols to be agreed on trade in goods and trade in services. In addition to that, and as the Secretary General mentioned earlier this morning, we also have a bigger issue on dispute resolution. It's also one area that is outstanding. And if I say the outstanding, it's not because the will was not there, the determination wasn't there, it's because they were derailed by COVID-19 challenges. So I think they're still going to be happening and it's going to work out well. Phase two, Adjoa, you touched on this earlier, would be around the areas of negotiations on protocols for investments, protocols for intellectual property rights, and protocols for competition policy. You know, one thing I wonder is why we are still delaying conversations around the protocol for e-commerce. I just feel this should be included in phase two negotiations. Because from experience and conversations I've been having in different geographies across the continent, we do have opportunities to approaching different countries to negotiate for bilateral agreements around e-commerce. So my suggestion to the Secretary General will be to probably include this in phase two negotiations and not consider it as a phase three negotiation. This is also possible because I credit to those who started with this whole initiatives. The process is very dynamic. And as I discussed with participants across, in fact, before coming here, across the continent, they recognize the fact that there is design flexibility to incorporate additional instruments within the scope of this agreement. So there is room for more to be done. From a governance perspective, I think you've done extremely well. I will give credit to the African Union for what they've done and the AU Commissioner for what they're doing here. There is more clarity on the key governance bodies. I think the Secretariat is the lead body and overseen by the Council of Ministers. Another body which I think is very important, which we have here, is the Africa Trade Observatory observatory unit that has been set up within this agreement. We all know the importance of data, and not just data, but I'm sure Dr. Fofack would say data sanity. So these are issues that are there. I think the challenge for us in this space is that there is really no supranational body that oversees, from a governance perspective, the implementation of the agreement. That is a challenge that we would have to have conversations around. And I was at in Egypt, in Addis Ababa actually, and I've had conversations with some colleagues at the AU around the lack of that supranational body to do it. So Dr. Mene would have to be a superman and to implement and drive compliance. Compliance thus becomes extremely important. And to be more effective, I think there's a simple process, it probably, I'm sure he's thought of it already, is going to implement that of identifying that's alleged non-compliance, verifying those, validating the root cause of the non-compliance, and resolution. You know, resolution, the approach could be from the root causes. And it could be an issue of education, lack of resources, but if it's a question of misconduct, there must be accompanying sanctions. And I believe the Secretary General will have to work some miracles to see how he could influence without decision rights to get the AU to agree on a process of sanctioning those who willingly commit serious misconduct. And consequence management, of course. To me, they're extremely important. They prevented us from moving forward with regional economic communities in the past. And I've lived that experience having worked across the continent. The next area for me will be talent mobility. I think it will be extremely important for us to work on mutual recognition arrangements, which would allow us to have a process where there is a transparency across the continent for qualifications to facilitate mobility of skills. That's something that we'll have to work on, but it comes with its own political challenges. And I've tried to move talent from one country to another across Africa for several years. Believe me, it is a difficult task. And finally, the politics. I think we should just guard against imperialist tendencies. And Adjoa, in this case, what I'll be saying here will be the edited version. When I meet with politicians, I generally give them the unedited version. But these are important when I'm having direct conversations, because my generation has many of those leaders in positions of power. And I have and feel, and I have an obligation to honestly communicate with them what I feel about what's happening in our continent. By the way, I have nothing to lose. I'm not looking for a job there. I think we should guard against imperialist tendencies. You know, economic interest above politics, yes. Although we know this is very difficult, because there are elites who benefited from the irregularities and inefficiencies of the past. I am not saying you completely eliminate that group of Africans, leave them where they are, give them the opportunities, but ring-fence them and look for other ways of compensating them for any political contributions they made to you as a leader. But I think the more difficult part is to really look hard, really, really hard, to come up with a new group of excited, motivated Africans from the diaspora, from the domestic economy, public-private sector, who are ready to redefine the processes forward. Another area of politics is delivering on the commitments under the trade, and also be careful about new arrangements. Currently in Africa, you know, there are new arrangements. EU 2020 with Africa, with some African nations, will at the end of 2020 have to revisit and renegotiate. We know the Americans are coming up with their own protocols on how the US would interface with the Africa Continental Free Trade Area. We know from the East, people are talking of a certain initiative around One Belt, One Road. We know the UK had a famous rendezvous in January this year. It was around trade and investments. I think it'll be important to be able to manage those twin processes, to be able to realize national, regional, actually the triple processes, to realize regional, national, and continent and global initiatives that are going on, and be part of those conversations. Because of geopolitical developments today, we cannot be out of any of those conversations. You know, at the end of the day, what we are looking for is a much more prosperous, in my opinion, dynamic and prosperous ecosystem for business in the continent. So, as we go ahead and forge for this, many people really don't know what is happening. Many Africans don't know what we're trying to do. Communication as a process will be something we'll have to focus on. And we need to go nuclear on telling the Africa story. You know, as Dr. Fofack said, you said, I heard from the opening conversations, I was so inspired that I'm looking today for a new narrative of Africa that moves away from the traditional narrative and addresses one issue that Dr. Fofack just talked about earlier. And as you were saying it, just thinking of this. You know, Doctor, one thing I would really love to see as we define the new narrative for Africa is to replace two words, commodity and volatility, with more inspiring words, also two, resilience and sustainability. Thank you.
Thank you. Wow, that was powerful. Thank you very much, Ebenezer, Essoka. That was really, really good. And I actually like the point that you made about the African Union working together and coming together to have a process whereby they can sanction entities that break some of these compliance regulations. Because I really believe that it's really going to help give the rest of the world some comfort when it comes to investing in Africa. So thank you for that. That was a really great answer. I'm going to go to the next question, which it's for the two of you. And so whoever can tackle it first, I'll probably go to Dr. Fofack. So the question is a deep dive into what the opportunities should be. I know you've touched on a lot of these already. So I'm going to add that to the two questions together that you can both tackle. And the next one is, what are the anticipated challenges and how do we overcome these challenges? So you've touched on the opportunities, both of you, in some areas. So you can, if there is anything more that you wanted to add to the opportunities, and also if we can go in, dive deep into the sort of the challenges and how we can overcome these challenges as a continent from the different levels, so the governmental level, business level, individuals. So over to you. I'm going to go to Dr. Fofack first of all, and then we come back to you, Ebenezer. Thank you so much. Dr. Fofack,
thank you very much, founding chair. And thank you very much, Dr. Essoka, for such a wonderful summary of the challenges. I think Dr. Essoka has reminded us that despite all the enthusiasm that we have, the AfCFTA may be a necessary but not a sufficient conditions to transform the African continent. In essence, that's what he said in his wonderful interjections. And he's perfectly right. I think it is necessary conditions, but to be sufficient, we have to overcome a number of challenges. He alluded to the political aspect of it, some of these challenges. And we are at different stages in the process of economic development. Some countries are more industrialized than others. And some which are more industrialized, when it comes to the rule of origin, we want to have a maximum threshold, maybe 80% of raw material produced locally to satisfy. Some which are less industrialized may be asking for a bit less. But in between, there is a challenge that the rule of origin, as he pointed so rightly, which is supposed to be the main centerpiece of the AfCFTA, in the sense that it will address industrializations, it will help lift the supply side constraints, the challenge of reaching an agreement on the threshold, the minimum threshold. It's something that is at the center of this process, and hopefully we'll be able to resolve that challenge to ensure that the AfCFTA becomes an acceleration of industrializations instead of being a constraint to growth. In other words, if it is well done, it will accelerate industrializations. If it's not well done, it will constrain growth in the short term. But there are other challenges that one should mention, and the whole issue of infrastructure and logistics, which is, in our view, fundamental. When we talked about infrastructure, it's not just the physical, it's both the physical, the digital. As we heard earlier, we are moving toward an e-commerce, which will require a new set of skills within the continent. So we need infrastructure, top-notch infrastructure, frontier infrastructure, to drive the industrializations and to drive the shift toward manufacturing industry that we're talking about in a way that does not constrain the productivity. And so that is another second component, which open significant opportunities for both domestic investors as well as foreign investors within the continent. Another important challenge that we often do not talk about, it's in the space of trade informations. And the trade information gap today is such that you may have Africans who are importing leathers from Italy, while they can get the best leather from Botswana, actually exporting it to the EU, and then it comes back. And we hope that the trade observatory that will be established will begin to close that information gap. And we at AfCFTA, we are also working very hard to narrow that trade information gaps. Then there is the aspect of non-tariff barriers, the NTBs, which are also very important, often not visible, yet significant in terms of constraining intra-African trade. We've seen gain in terms of trade in East Africa just by establishing the one-stop border shop to promote and boost trade within that sub-regions. And of course, I think one cannot mention the challenges without talking about the financing of both infrastructure and trade. We are still in a region where the infrastructure financing gap annually, it's in several hundred billions of dollars. And so it's difficult for one single country or institution to actually close that gap. We need a strong partnership between Africa and external world to mobilize that support. And trade financing gap, as you know, is also in the same order of magnitude, more than $120 billion annually. So we have to close that gap and make sure that the financing of African trade, it's more balanced. As of now, it's been heavily skewed toward extra-African trade, the commodities, of course. So we have to now make provisions to specifically finance intra-African trade, which will be on the rising path. And naturally, another important aspect is the issue of maturity mismatch. How do we make sure that we have enough resources to finance the long-term investment that we need, the infrastructure, in a way that would not undermine the balance sheet of financial institutions? And this is where we need development bank to actually play that role of de-risking. And I think another important aspect, and to go back to the point raised by Dr. Essoka, that the AfCFTA, it's a necessary but not a sufficient conditions, really relate to the role of the private sector. These initiatives will not work, I insist, the AfCFTA will not deliver if quickly we do not establish a new framework for productive engagement between the African private sector and African government. That public-private partnership is what will ensure that this large market of 1.2 billion is also a market for African entrepreneurs. Otherwise, we may have a model whereby foreign direct investors will come and repatriate the profit at the end of each month of each year, with weakening the process of domestic resource mobilization. That is key. So we need foreign direct investment, definitely, but we also need a new form of public-private partnership, one that will drive and empower African entrepreneurs and make many billionaires in this continent to ensure sustainability. I'll go back to the work used by Dr. Essoka. I think there are opportunities in that sense. We mentioned in the automotive industries. I can also mention the agriculture productions. And you may be surprised to know that last year, Africa spent more than $90 billion on food import. In regions which still possess 60% of the world remaining arable land, spend more than $90 billion to import food. So that is a growth industry, a growth sector. The world is moving toward the new electric vehicle, whereby those who have lithiums and excess can get into the production of lithium battery. And I think we could actually use that model to develop regional value chain in the productions of battery for electric cars within the African continent, and use that as an entry point to connect Africa to global value chains of new energy vehicle. Mind you, China overtook the US as the largest market for car in the world. I think Africa will take over from China. It's a matter of time, but we have to be prepared to make sure that it will be investment that is a multiplier in transforming African economies instead of continuing to import car, a model that is not sustainable, given its implication for balance of payment. Let me stop here for now. Thank you.
Thank you very much, Dr. Fofack, for that. That was really good. And I like the fact that you mentioned that we need strong partnership between African and also other parties who are non-Africans for this to move forward. I've got a question for you, which is from our audience. And so the question is, how far does research enlighten our understanding and use of free trade? So that's a question for you, Dr. Fofack, from the audience.
How far does research enlighten our understanding of free trade? I mean, of course, I think Professor Joseph Stiglitz, the Nobel laureate, often says that it's more expensive to feed a cattle in Europe a day than to feed an Indian. In other words, the subsidy that we give to cattle within the EU is more than what Indian farmer needs to live on a daily basis. I think research is very important in uncovering the patterns of trade. And research has shown us that, for instance, that intra-regional trade is actually an absorber of adverse global shocks. In essence, if Africa is able to increase its share of intra-African trade to about 50%, the volatility that we talked about, the word that Dr. Essoka doesn't want to hear, would actually be reduced significantly, because once out of twice, Africa will be in deficit or in surplus. So that's what research can tell us. Research can also inform us about what is driving growth, what is driving trade, and the semiconductor role, and the tech industry, and the issue of productivity. So I think research has a major role to play. It can also really tell us what are the constraints that we are facing in the growth of African trade, not just from the standpoint of supply side, but also the standpoint of financing. And then the whole issue of productivities and different stages of economic development and their implications for the actual implementations of the AfCFTA, the politics of it. I think the countries which are more advanced industrialists in the industrial setting will be more inclined to accelerate the process because they stand to benefit. Intra-African trade being largely driven by industrial and manufacturing.
Thank you very much, Dr. Fofack. I'm going to come to you, Mr. Ebenezer Essoka. I would like you to add to what Dr. Fofack has already talked about around the opportunities and the challenges. If there is anything else that you wanted to add to that, after which I've got a really great question for you from the audience. So I'll let you, I'll hand over to you. Thank you so much, Mr. Essoka.
Thanks. So I think talking of opportunities, I'd like to take off from the question around research. I just think, you know, this is an opportunity for the continent, and it's a basic one. I think there is commercial ignorance, broadly speaking, across the country. Before you get to a level where you can trade profitably, we need to bridge that gap. There is this variable of having a better understanding of demand and supply dynamics in the continent. If we don't have the right data, and research doesn't help us to understand the demand and supply dynamics, there won't be meaningful trade. Another area is, again, where research can help, is to appreciate the quality of goods and services that will appeal to Africans. You know, we just talked about, and as Prof talked about, the cars that we're looking at today, developments in the automotive industry. Now, the investments we're going to make in here, if we don't do the right research, will be in the wrong technology for automobile, for the automobile sector. So it's so important that we get this right, because at the end of the day, what we're really trying to do here is to get to a point where Africans are proud to consume the made in Africa brand. If you can't get us to appreciate it and consume made in Africa, we will never get the delta on improvement of intra-Africa trade we've always talked about. It will remain one of those million dreams we've had forever, but that will never be realized. So that is on the opportunities, but they are real opportunities there. Now, Doctor talked a lot about infra. The AU Commissioner for Infrastructure touched on it again in the opening session. And every speaker, so including yourself, Adjoa, talked about the importance of infrastructure and the challenges in funding infrastructure. You know, I'd like to share with you an example of how it's been done and done successfully with all the points raised earlier in collaboration, having a multi-stakeholder platform, bringing together local operators and international operators to source projects across the continent and mobilize investors to have meaningful conversations and excite them to make investment commitments. PIDA has 1,000 projects ready for conversations at different stages of preparedness. But this initiative, I think, is African Investment Forum. Again, your protocol, I hope, permits me to mention this. If it doesn't, please stop me, because I read your code of conduct. I think this is so important to give examples and let the world know that what Volkswagen is doing in Rwanda is not an accident. You know, the African Investment Forum was a vision of Dr. Adesina of the African Development Bank in partnership with development-centric financial institutions of the continent. Development Bank of Southern Africa, Trade and Development Bank based in Nairobi, Africa Finance Corporation in Nigeria, AfriExim, of course, Egypt, the Africa 50 and infrastructure entity based, infrastructure investment entity based in Morocco, the European Investment Bank, the Islamic Development Bank, and of course the Africa Development Bank. What these founding partners did is set up a platform that has been able to crowd in investors from across the world. But before the investors could get there was a determined and well-defined process of originating projects across the continent. So projects were actually sourced across the continent. They were curated and made ready for conversations with investors. Having gone through the basics, ESG standards, particularly for institutional investors, compliance issues, customer due diligence, and a host of other basic and prerequisite criteria that you would have to have before you get to a situation where it's an investment or project is ready for conversations with investors. There were three main objectives, and there remain three main objectives for the African Investment Forum. It's to advance projects to bankable stage, raise capital for bankable projects, and accelerate the financial closure of the deals. You know, I have never been so excited, having been in the commercial banking sector for more than 25, 28 years. This was the first time I got into touch with development financial organizations, working with them. Because on this role, I was a senior advisor to the initiative. So in terms of compliance, I would say disclosure, full disclosure. But that's not the point. The point here is the outcome. What was able, the partners and Dr. Fofack contributed, because in AfCFTA, they were actually proactively involved in this process, and every other institution I mentioned before. We had the original conversations in 2018, and I can tell you in summary and in the interest of time, we had 63 projects well curated for investor conversations with a value of 46.9 billion. And when we went to those conversations at boardroom conversations, because this is a strictly transactional platform, we were able to have 49 projects with a value of 38.7 billion that attracted investor interest within 72 hours. And many thought this was a joke. It can be repeated. 2019, again, the partners working together. And in 2019, we even had more interest and more projects that came across the continent, curated. And we ended up with 57 projects we thought were investor conversation ready, a total value of $67.7 billion after the conversations. And these are real boardroom conversations. If you've ever been in a credit committee, imagine the engagement between investors and project sponsors, or an investment committee of a PE fund. In 2019, November, 52 projects with a total value of 40.1 billion attracted investor interest, again within 72 hours. There were over 698 investors from within Africa. You had the African pension funds, the African insurance companies, the African central banks, the African commercial banks, the Africa sovereign wealth funds, working in partnership with institutional investors from across the world. They came from Europe, came from Canada, USA, Canadian pension funds really featured well, USA, sovereign investment groups of USA were present, Asia, Middle East, they came together for these conversations. You know, overall, projects from 25 countries were looked at. 7 of them were multinational projects, and 3 were regional projects. Again, consistent with the conversations we're having around regional integration. You know, as we speak today, it is not over. The work continues even with the COVID-19 challenges. There is an active tracker process to ensure that each of these projects and expressions of interest are managed to financial closure. And as we speak, there's great news. 8 projects, value of $2.1 billion, have already been closed. We have an active pipeline being monitored for closure with a value of $87.1 billion. There are 41 deals that are being looked at in this space. Besides that, total projects originated, some of them already in the PETA pipeline of projects, where for 2018, there were about 199 projects with a value of 145 billion that were not taken to boardrooms yet. For 2019, you had 171 projects with a value of 134 billion. So we have a pipeline of approximately 3 billion already that we're looking at, and that is being curated for further conversations. The sectors, health, interestingly, before COVID, has already been of interest in the continent. So health projects featured very well. Industrial and trade projects, energy projects, infra projects, ICT telecoms, agri and agro-processing. I think in this interest and in the interest of the direct interest of the continental free trade area, a major contribution made by AfCFTA was signing a major protocol for the development of rail corridors across the continent. This was an example where an African, well-run African entity was in partnership with a foreign entity, in this case, a German entity. An MOU signed at the African Investment from 2018 led to AfriExim and this new entity, TELODB, launching their vision and the vision of the African Union, the vision of the regional economic communities across the continent for rail, sustainable, modern and sustainable rail infrastructure across the continent. I think, Dr. Fofack, congratulations.
Thank you.
For the signing of the deal in Ghana with a major Ghanaian entity for the development of rail rail corridor in Ghana. So this is an example, put bluntly, of the point we made earlier, because the question is usually, where are the projects? We do have the projects. What is the process for foreign investors to be able to come to Africa and get investor-ready conversations with African promoters? There is one platform here. I'm sure there are many other platforms. Zenith Bank would have a platform. Your promoters matter would definitely have a platform on advisory capacity and the seed projects across the continent. So there's several of these we can talk about. But I'm also excited to be part of this experience where you could mobilize so much money. I'm talking within 42 hours, mobilizing $38 billion of investor interest. Within 72 hours, $40.1 billion of investor interest. So in summary,
I might have to.
Yeah, thank you. In summary,
Conscious of time.
The funds are there, so let's go trade, let's play, and play profitably. In terms of challenges, I would say they've been mentioned by Prof, and to me, the opportunities really outweigh the challenges.
Thank you very much. I was looking at the time because the webinar is going to end soon, the way it's been programmed. So that's not enough time to take any more questions from the audience. I'd like to apologize, audience, but we will try and address your questions later on. I think it's still on. Okay, that's okay. So yeah, we'll try and address your questions later on in our summaries. And before we finally round up, I'd like to ask Mr. Ebi to say one last, any sentence, anything that you'd like our audience to remember from what you said today. And then I'm going to go to Dr. Fofack before we round up very quickly. Thank you very much.
Jay, for closing remarks, I think one thing I'd like to say, there is the Africa Continental Free Trade Area has a protocol for trade in goods. The Africa Continental Free Trade Area has a protocol for trade in services. But the Africa Continental Free Trade Area has no protocol for trade in influence. Thank you.
Thank you very much for that, ladies and gentlemen. That is Mr. Ebenezer Fofack. Thank you for that. And I'm just going to go straight to, sorry, Mr. Ebenezer Essoka. Apologies. I'm going to go to Dr. Fofack for the final few words before we round up. Thank you, Mr. Ebenezer Essoka. And apologies for the slight error there. Thank you
very much, Adjoa. I think it's been a rough week for you. If you've not slept, I don't know for how many days. And I think I would like to build on what was said earlier by Dr. Essoka, that the AfCFTA is a necessary but not a sufficient condition to transform African economies. We have to change the mindset within the continent, move away from being at the receiving end to become more proactive in the production space. For instance, the world is racing for a COVID-19 vaccine. Whether you are in the UK, in China, in Russia, or in the US, why don't African leaders mobilize the youth, the younger scientists, to at least start working on an African version of that COVID vaccine? And that change of mindset apply across all the sector. One strategic sector we did not discuss is the need to invest in science and technologies and produce the critical mass of African scientists and engineers to drive that transformations. The second thing I'd like to talk about to close, regard your global investors, to tell them that when it comes to perceptions of risk, it's highly overinflated within the continent. The perception premium has been a deterrence. We all know return on investment are very high in Africa, despite the high cost of funds that the region is complying with. And if they have any doubt of our own assessment of that inflated risk perceptions, I would like to take them back to the FT, the Financial Times. You are London-based FT. Last year in September, they felt compelled to write an editorial. And the title was, "Perceptions of Africa Lag Behind the Brightening Reality." I repeat, perceptions of Africa lag behind the brightening reality. And that brightening reality is being exponentiated by the AfCFTA. Thank you very much.
Thank you very much, Dr. Fofack. It's been such an honor to have both yourself and Mr. Ebenezer Essoka in this conversation. I've absolutely enjoyed myself, and I know our audience have. There's a lot of questions that have come through, but we will try and answer those questions in our summaries to them by Monday. So thank you very much once again, and thank you to all our audience for joining us for this session. Thank you. Bye-bye.
Thank you very much. Thank you.
Thanks.